All right, ladies and gentlemen, welcome back to the channel. And today we're diving into a hot topic that every Ottawa homeowner needs to know about: the new vacancy tax. With the housing market constantly evolving, it is more important than ever to stay informed with this new tax and how it could significantly impact your property and your wallet. Whether you're a homeowner, investor, or just curious about the real estate market, this video will break down what the tax is, why it was introduced, and how it affects you. Understanding it is crucial to avoid hefty fines and to make the most out of your property investments. So grab a coffee, settle in, and let's uncover everything you need to know about Ottawa's vacancy tax. Let's go. Before we dive into this little tax lesson today, my name is Belanger. I am a realtor here in Ottawa, and I help families move into the Ottawa real estate market and, of course, get out of the Ottawa real estate market via downsizing and other services. I'll leave all my contact details below. Reach out to me if you're in the market to either buy and or sell. Now let's get into this tax lesson as it's relatively new here in Ottawa. All right, let's go. The Ottawa Vacancy Tax is a levy imposed on residential properties that remain unoccupied for more than 184 days in a calendar year. This tax aims to encourage property owners to either rent out or sell their vacant homes, thereby increasing the availability of housing in the city. Implemented on January 1st, 2023, the vacancy tax was introduced as a measure to address housing shortages in Ottawa. This initiative follows similar policies in other cities like Vancouver and Toronto, which have seen varying levels of success in managing their housing markets. The vacancy tax was introduced to combat the growing issue of housing shortages in Ottawa. By taxing properties that are left vacant, the city aims to deter speculative investments and ensure more homes are available for residents who need them. The tax motivates property owners to either rent out or sell their vacant properties, thus increasing the number of available housing units. By increasing the supply of rental properties, the vacancy tax helps stabilize rent prices, making housing more affordable for residents in Ottawa. The vacancy tax is calculated based on the assessed value of the property. So for example, if the tax rate is 1% and the property is assessed at a value of $500,000, the tax would be $5,000 annually. As of right now, at time of recording, the standard rate for vacancy tax in Ottawa is 1% of the property's assessed value. This rate is consistent across all residential properties, though specific conditions and exemptions may apply based on the property use and location. As mentioned, the tax applies to all residential properties that are unoccupied for more than 184 days in a calendar year. This includes properties not used as a principal residence or rented out for short-term periods. Okay, so for clarity, let's list off the exemptions. Primary residences, homes that are the principal residence of an owner, are obviously exempt. Properties under renovation, awaiting probate, or affected by court orders are also exempt if proper documentation is provided. Properties used for short-term rentals with permits, those undergoing major renovations, and newly built homes that remain unsold are also exempt. Okay, so now let's talk about the requirements for property owners. Property owners must submit an annual declaration to the city indicating the occupancy status of their properties. This declaration is mandatory, and failure to submit it on time will result in the property being deemed vacant and taxed accordingly. Steps for compliance and deadlines. Annual declaration. Owners must complete and submit their property status declaration by March 16th every year. Owners may need to provide proof of occupancy, such as utility bills or rental agreements, especially if claiming exemptions. Failure to comply with the vacancy tax regulations can result in significant penalties. These include fines up to $10,000 and additional interest on unpaid taxes. Persistent non-compliance can lead to legal action and property liens. Okay, so the city conducts audits on property declarations and may request supporting documentation to verify occupancy claims. Non-compliant properties are subject to penalties and enforcement actions to ensure adherence to the tax regulations. The vacancy tax aims to make more properties available for rent, potentially reducing rental prices and making housing more accessible. A more stable rental market can benefit for both tenants and landlords by providing more predictable rental income and housing availability. The vacancy tax can be a financial strain for property owners, especially those with legitimate reasons for keeping properties vacant. Compliance with the tax regulations requires careful documentation and timely reporting, adding an administrative burden for property owners. Vancouver's implementation of the empty homes tax has resulted in a significant reduction in vacant properties and generated substantial revenue for affordable housing projects. Toronto recently adopted a similar vacancy tax, and early indications suggest it will positively impact the housing market by increasing rental availability. All right, I'm not an expert here, but let's go out on a limb, and based on the experience of other cities, Ottawa's vacancy tax is expected to reduce the number of vacant properties, increasing housing availability, and stabilize the rental market. The success of the tax will depend on effective enforcement and compliance by property owners. Okay, just to summarize, I've put down the top questions just to sort of tie this thing all together. What is Ottawa's vacancy tax and how is it calculated? As mentioned, Ottawa's vacancy tax is a levy imposed on residential properties that are left unoccupied for more than 184 days in a calendar year. The tax is calculated based on the assessed value of the property. So for example, 1% of the property's value, let's say it's deemed at $500,000, the annual vacancy tax would be $5,000. This tax aims to encourage property owners to utilize their properties more effectively, either by renting them out or selling them on the open market. 2. Who is required to pay Ottawa's vacancy tax? And are there any exemptions? The answer is, of course, the tax applies to all residential properties that remain unoccupied, as mentioned, for more than 184 days in a previous calendar year. However, there are several exemptions. 1. Primary residences. 2. Properties undergoing major renovations. 3. Properties where the owner has passed away. And 4. Properties occupied by tenants under a tenancy agreement for at least 30 consecutive days. And finally, properties under court order or other governmental authority that prohibits occupancy. Okay, common question number 3. How do I report my property status and what are the consequences for non-compliance? Property owners must submit an annual declaration indicating the occupancy status of their properties by March 16th every year. And failure to submit this declaration will result in the property being deemed vacant and subject to the tax. Non-compliance can result in penalties, including fines up to $10,000, and on top of that, additional interest on unpaid taxes. And the city may conduct audits to verify these declarations and the supporting documentation provided by property owners. Common question number 4, how does the Ottawa vacancy tax affect properties operated as Airbnbs? Properties used as Airbnbs or other short-term rentals can be considered vacant if they do not meet specific criteria. To avoid the tax, the property must A, be rented for more than 100 days annually, B, be located in designated rural zones, or C, have a valid short-term rental permit, and last but not least, provide proof of revenue showing it was rented for more than 100 days. If these criteria are not met, the property may be deemed vacant and subject to the vacancy tax. And the last common question, what are the benefits of this tax? The vacancy tax aims to increase housing availability by encouraging property owners to rent out or to sell their vacant homes. And this can help stabilize rent prices, making housing more affordable for residents. Additionally, reducing the number of vacant properties can enhance community stability as occupied homes contribute to vibrant and engaged neighborhoods. The revenue generated from this tax can be used to support affordable housing projects and housing services. All right, we're gonna wrap up the video here. Again, short and sweet on this video. I hope you enjoyed this little tax lesson. It's a question that's been coming up for me personally a lot more frequently, and I'm thinking of people who leave in the winter for 6 months or approaching 6 months. So those snowbirds, for example, this might be of interest to you, or those looking to operate Airbnbs and what are the consequences of operating those Airbnbs. So I hope you enjoyed it. It's a relatively new tax. I've enjoyed putting this video together. I would appreciate a thumbs up letting me know that you've enjoyed this content, or sharing it if you think I've earned it. And until the next video, take care.